So there is a famous saying that goes like this: there are two things that are inevitable in life: death and taxes. While death is indeed inevitable, we're all gonna eventually pass away, taxes, not necessarily. If you live in Canada, there is something called a tax-free savings account that you can benefit from that allows you to pay zero taxes on your gains from the stock market, guys. It is very crucial. If you can save your money from the tax man and you can shelter it to basically build your empire to become bigger and stronger, all the power to you. Go ahead. I'm telling you this because I didn't know this when I started investing. There is a way that you can keep 100% of your income tax free from your investments if you're in Canada. If you want to learn how to maximize this account, stay tuned for this video. Alright, so what is a tax-free savings account? A tax-free savings account is an account that the Canadian government created in 2009 for the Canadian people to encourage them to save more money. But do not be misled by the name of tax-free savings account.
Ça dépend. Ça dépend. Wait. Ça dépend on what exactly?
This is not just any regular savings account, right? It's not like going to the bank and telling them you want to open a savings account where you just plow some of your savings from the work that you do. No. It is very different. Unlike most savings account from banks and other institutions, this tax-free savings account allows you to invest in capital markets. Capital market means like the stock market. You have access to the stock market through a tax-free savings account. So whatever you make as gains that you have invested through your tax-free savings account is tax-free because you have invested it through your tax-free savings account. So to make this simpler, I'll just give an example. So let's say you put $1,000 in Apple stock and Apple goes up a bunch and then you sell. That money that you make is tax-free. Tax-free, guys. I know it's hard to believe, but it's tax-free. I know it's hard to believe because we rarely get any tax breaks from the government. So when we find one, we have to maximize it. So this is one way to go. Alright, so this brings me to my next segment, which basically discusses who can qualify for a tax-free savings account. So basically, if you're in Canada and you have a valid social insurance number and are 18 and above, you qualify for a tax-free savings account. That is it. That's all you need to qualify for a tax-free savings account, and you can go ahead and invest your money tax-free. At the end of the day, you are tax-free and you don't have to pay anything to the tax man. Alright, so how do you go about to open a tax-free savings account? So there are two ways that I personally know of that you can open a tax-free savings account. I'm not sure if there are other ways, but I'll tell you the information that I personally know. So the first way that you can open a tax-free savings account is going to your bank. You can go to your local bank and tell them that you want to open a tax-free savings account, or in short, a TFSA. You go to your bank, you tell them that you want a tax-free savings account, and sure enough, they'll create one for you. This has its pros and cons, but one of the biggest reasons why I don't go through my bank for a tax-free savings account is because if you do that through them, it means that you're only going to be able to invest through them, and they charge you a commission fee. They charge you $10 for every time that you purchase a stock. I don't go this way because I want to save my money, and I'd rather use that $10 to buy more shares rather than giving my bank $10, for free. So the second way that you can open a tax-free savings account is this way. There are online brokerages. An online brokerage is basically a firm that allows you to invest through them directly to the stock market. So what I use is an app called Wealthsimple Trade. It's a very intuitive app to use. I am not sponsored by any manner, means, or way by Wealthsimple Trade. I'm just giving my own opinion about what was easy for me to do. So if you go through Wealthsimple Trade, it's very intuitive. It'll take you less than 10 minutes. And the beauty of Wealthsimple Trade is that you don't have to pay any commission fees. Unlike the banks, anytime you go ahead and buy shares of a company, they don't charge you any commission fees. Alright, so this brings me into the limitations of the tax-free savings account. You might be thinking that this is way too good to be true. Like, how can you pay zero taxes on your capital gains? Like what's the government's play? Like, why are they doing this? Like, they're basically losing money on every transaction because it doesn't make sense for them to do that, right? Because they love to get their fair share of your capital. So basically what the government did is they put a limit. They put a cap to how much money you can put in a TFSA. So the way this works is that every year there's an allocated amount that is added to your tax-free savings account. So I'll give you an example for this to be more digestible. So remember, I said that you have to be 18 and above to be able to qualify for a TFSA and have to have a social insurance number. So let's assume that you turned 18 last year in 2020. So for 2020, the amount that was allocated to every person who has a TFSA was an amount of $6,000. So this $6,000 is the amount that you can put in additionally on your TFSA. Let's say that you turned 18 last year and you never used your TFSA, and this year you're going into investing. So how does that work? So when 2021 rolled around, they gave you another $6,000. So basically what happens is, when you do not use the amount that was allocated to you the year before, it rolls over into the next year. So basically it's like this. So $6,000 from 2020 and $6,000 from 2021, which brings you to a grand total of $12,000 that you can invest to your TFSA. I suggest that every person who's investing in Canada would first max out their TFSA before investing through any other account. The taxes here in Canada can be pretty steep, and you can pay all the way up to 30-40% of your capital gains that you earn from the stock market, just because you have to pay taxes, right? So if you don't have this knowledge, you won't know that there's these things available to you, and that's why I'm making this video. So go ahead and max out your TFSA first, so that you can keep all that money that would get taxed and reinvest it in yourself, so that your account becomes bigger and you build your empire to become greater. If you're watching this and you had never heard of a TFSA or what it is, the best way that you can go ahead and discover what your limit is for your TFSA is to log into my CRA account. I believe most Canadians have an account with the CRA. You go into the My CRA account and you scroll down, and right there, I'm going to put a pop-up here on the screen. You can basically see your total amount that you can basically invest in your TFSA. As you can see, my cap that I can't go over is $27,000. As we progress into the future, this amount will become bigger and bigger, because every year an extra $6,000 or whatever amount that they decide on is added on top of what is already there. So it just keeps rolling over and rolling over. So if you were born, I don't know, in 2009, I believe that your amount that you're able to invest in your TFSA so far is about $75,000. Alright, so this brings me to my last segment, where I'll be discussing whether there are any risks attached to having a TFSA. The only risk that I see is basically somebody who basically puts money that goes well over their limit. So for instance, my limit is $27,000, right? So the problem comes if I go ahead and invest $28,000 in. So when you go over your limit, there's a penalty. The penalty is this: you will pay 1% in taxes of whatever amount you're over. So basically, if I put in $28,000 and my limit is $27,000, I'm over my limit by $1,000. So the way it goes is they would charge me 1% of $1,000 every month until I have settled this problem. If you keep this going on for long enough, this can be a substantial amount of money that you're gonna have to pay back to the government. So please do not go over your limit. And I get this question often too. Can I open only one TFSA, or I can open multiple TFSA with multiple institutions? And here's the answer for that. You can open as many TFSAs as you deem you need. You can open 5, 10, 20, but I would suggest to keep it on the minimal. Maybe have 1 or 2 or 3, but I personally only have 1, because that way I can keep track of exactly how much money I've put into my TFSA, so that I know that I'm never over my limit, because there are some penalties that are attached to going over your limit, and it keeps me more organized that way. So I would suggest that you do the same thing, but if you want to open multiple TFSAs, that's possible. You can open a TFSA with CIBC, BMO, TD, Wealthsimple Trade. They're all gonna allow you to open a TFSA with them. Just keep in mind that you can't go over your limit. Alright, so thank you for watching. Have a great day, and I'll catch you on the next one. Peace. Puts money